Hi, everyone. This is Tim Massid remotely. I had planned to be there. I had wanted to be there. Um, but I was asked late last week to testify on digital assets before the House Financial Services Committee tomorrow. And so that's a good thing to do. And therefore, I'm preparing for my testimony and didn't want to risk getting stuck in a travel delay. So, in any event, I am a research fellow at the Kennedy School. I'm the director of what we call the Digital Assets Policy Project. I've been in this space kind of from a policy side and regulatory side now for over 10 years. I was the chairman of the Commodity Futures Trading Commission, and it was under my leadership that we declared Bitcoin a commodity. And I've been writing about the space and speaking about it ever since. And let me just say a word about what we do with the Digital Assets Policy Project. So try to do a couple of things. One, and I'm only up at Cambridge part-time, so what we do, though, is we bring in speakers occasionally. You know, we've had Jeremy Allaire last year. We had Adrian Harris, Jeremy is the head of Circle, the second largest stablecoin. We had Adrian Harris, who's the chief regulator in New York and one of the leading states regulating crypto. We had the former chair of the SEC. So things like that. We convene roundtables to bring people from the crypto sector, the digital asset sector, and government officials and academics together to talk about different policy issues. And I have a few students who I advise on papers in this area and also a couple doing research. So I am just so delighted that we're able to do this workshop. We have done this now a couple of times, and it's always been quite popular. I want to first thank my assistant, Eric, for all he's done to make this possible. I know he's there, and he's kind of handled all the logistics and everything, and that's been great. We've been able to do it because Steve Derezinski has taught it. And I think now, Steve, this is the third time we've done it, perhaps? And he's joined tonight by Colfax Selby. I'm delighted to have both of them. Steve has taught kind of a blockchain sort of course or investing. I'll let him describe it more fully. And so he and I met a couple of years ago, and he's done this workshop now a couple of times. The purpose of this workshop is so that you can learn how the technology works. And I'm sure there are people in the room who have different degrees of knowledge, and that's all fine. You can be a total beginner. You can be someone who's already done some things and just wants to learn more. It is not, let me underscore this, it is not to encourage you to invest. Neither I nor the Digital Asset Policy Project nor Harvard Kennedy School is encouraging you to invest. There's lots of risk, lots of volatility, as probably everyone in the room knows. A lot of tokens that have no value other than what other people think they're worth. But the technology is important. Blockchain technology is important. Digital assets technology is important. And the purpose of this workshop is so that you can learn how it works. And of course, we're going to, do that with things that exist today. And fortunately, we can do that with things that it doesn't cost very much to experiment with. And that's kind of been the whole premise of this workshop. Because, my own view is hopefully in the future, we will see applications of this technology that really have significant real world value. One of the things I'll be talking about tomorrow is stablecoins, which I think potentially could be a very important means of payment. But there may be other things as well. And in fact, one of the seminars I hope to have later this spring is with a couple of people from large traditional financial institutions to talk about what they are doing with blockchain. There is a lot of activity on the part of companies like JP Morgan and Fidelity and Goldman Sachs and others. So the format here, as you've probably heard, is that we'll do about an hour that Steve and Colfax will lead. Then we'll break for dinner so that they can then load your accounts and then reconvene and go on. I am going to try to kind of be in and out. I've got some more testimony prep to do. So I'm afraid I'm not going to be able to be in for the whole evening, but I'll try to rejoin in a little while. So with that, I will pause unless Steve or Colby or Eric, there's anything else, or Colfax, excuse me, or Eric, there's anything else I should say.
That's good.
All right, you guys are off to it. Have fun. Good luck.
Thank you, Tim. Ooh, that's loud. Is that too loud? That's okay. Okay. Did you adjust that? Well done, Eric. Well done. Okay, guys, welcome. Welcome to intro to Web3. How many of you guys actually have crypto? Anybody have crypto, or is this all just kind of intro? Okay, some people have some crypto. Okay, good. We're going to do 2 sessions, so I've got the first session teed up. Hopefully, you guys have all joined the WhatsApp group on there. Okay, if you haven't, please join it. This is going to be active during the conversation. We're going to be posting things to that you're going to need to do for some of the other sessions. So hopefully you all can access WhatsApp, and hopefully it also syncs to your laptop too. That'll be really nice to go from phone to laptop to be able to copy over very large numbers that you don't want to have to type in manually. So I'll pop that up later. And hopefully once everybody's in WhatsApp, you'll be able to communicate with each other in the class. And this is the 3rd time we've done this class. So we did reuse the old WhatsApp group. So when you post things in there, you will be posting to people who have taken the class last year too. So if they're still involved. Okay. So this is intro to Web3, or blockchain, or all the other wonderful names that you can give it. Tim already gave us the disclaimer, but I like to say it's for educational purposes only, education and fun. Just by background, I did my undergraduate degree at MIT in robotics. I've got an MBA from Sloan, and I also do some paragliding. That's me in Santa Barbara, jumping off some cliffs, which is also fun. Most of my background is in new venture creation, so figuring out how to take crazy technologies out into the marketplace. And blockchain happens to be one of those technologies. So if you peel apart all of the benefits of blockchain and you say, what are the interesting businesses you can run from that? There's a whole host of areas that can be disrupted. And I've been teaching a class called Blockchain Ventures that Tim alluded to at MIT for a while, where we basically did that. We said, okay, let's look at all the traditional businesses. What can we disrupt with the interesting technical aspects of blockchain technology? And out of that class, which was a 14-lecture semester-long class, we basically boiled it down into 3 of the most popular lectures. And then we boiled that further down into 2. And now we're doing 1 evening with all the best. So hopefully this will be very enjoyable. A lot of the classes that I teach, I like to kind of go from a high-level theory and then down into the practical, like tapping keys on a keyboard and interacting with apps, and then going back up again to high-level theory. So as we go through the whole session, you'll see kind of macroeconomic discussion, and then down into actual transactions in a wallet and stuff. So if you guys have questions anywhere along that chain, I'm happy to answer them. I kind of really enjoy that. How does the little pieces fit into the overall big picture, and then how does the big picture kind of move the big little pieces around as well? So, and you guys, Colfax Selby here is our helper. Fantastic. This is the first time we've had Colfax, so I'm very excited about that. There is some logistics and stuff we'll have to figure out, but we'll figure that out along the way. I was the CTO of a $300 million token offering. Happy to chat with you guys offline about that experience as well. Okay, so enough about me. I want to set the stage for where blockchain fits in the world. And you guys are all probably way too young to remember the World Wide Web when it first came out. But when that first came out, it was like the internet of information. Information wants to be free. We want to just spread information all over the place. Access to information. Isn't it wonderful that we can all read this information and everything? Which was great until you got to the point where you wanted to do commercial transactions. So if you go all the way back, people might remember like trying to put a credit card online was really challenging. Like trying to actually do a transaction was difficult because there was no uniqueness in the world of the web back then. So on top of the web, we built something called the blockchain, which is the internet of value. And the aspect of blockchain that's important on this diagram is that it creates a uniqueness, and it creates a cryptographic proof where I can say, I own this piece of the internet. Previously, you had to do all kinds of crazy things, right? Like get a .com and make sure you got an email address, then you have to have security. There's all kinds of things you had to kludge on the basic protocol to prove that you own something. With blockchain, all you need to do is have a wallet and sign a transaction, and you can say, I own this, and I can prove it, and I can lock it on chain, and the rest of the world can go see that I own this piece of the internet or asset or whatever it is. And that kind of breakthrough created this internet of value on which you can put assets, right? You can trade assets. So you can have this wonderful place where all of these unique assets are, but what's the most interesting asset that anybody wants to talk about? Of course, cryptocurrency, right? So on top of blockchain, you have the internet of money, or kind of the most fun asset on the planet. Just a little side note here. A lot of times when you have conversations about blockchain and people say Bitcoin and blockchain, and they kind of conflate those two terms, that's because the first blockchain that actually worked was Bitcoin. So when people say, it's the Bitcoin blockchain and the blockchain Bitcoin, and they kind of mix them all up, it's like, well, that's because they were sort of invented and came to life together. And then blockchain peeled off, and now there's dozens of blockchains on top of that. Okay. So I just want you to remember this kind of stack of sort of like the internet that you know, and then we're adding some value on top of it. And we're going to go back into this a couple more times. But what is a blockchain? The word blockchain brings up this kind of picture, right? It's like blocks with chains connected to it. And that is actually what the structure is. What you see on the picture is a red block, which is sometimes referred to as the Genesis block, or the very first time that a block has been mined onto a chain. It has to be done very carefully and with a ceremony, which they did a long time ago, actually 2009, so I guess not that long time ago. But each block is a series of transactions. So like I send you money, you purchase this NFT, all those transactions get stuck in a block, and then that block gets let's see, hashed, sometimes referred to as fingerprinted, or just uniquely calculated value. And that value is then chained to the next block. So as you grow the blockchains together, what you get is an incredibly secure series of transactions that are all locked in together. So there is no way you can change any previous transaction once the next block has been connected to the previous one without screwing up everything. So what you get is this incredibly long, very secure set of transactions that are locked in, that are immutable, that can't be undone and can't be hacked, if you will. Okay, so that's one view of the blockchain. I have about 4 different views of the blockchain. I want to tell you the blockchain from a macroeconomic perspective, from an accountant's perspective, from a legal perspective. Any dimension that you want to look at it, I'm happy to answer questions from that side of things. This is just kind of a very simple, like when you hear the phrase blockchain, what the heck does that mean? It actually is a bunch of blocks of transactions chained together cryptographically. Okay, so now what is the Bitcoin blockchain? It's a bunch of nodes, and this is old, 2021, but it's 11,000 nodes. It's little computers all over the world. This is not mining. I'm not talking about mining nodes. I'm just talking about someone's laptop sitting in a closet that's just saying confirming transactions every time. So there's 11,000 of these things that are all coordinated together. No one's in charge of these 11,000 nodes except for the protocol. All these nodes are answering to a protocol and answering questions and confirming all the transactions as they happen. So what about Ethereum? So Bitcoin is by asset value the largest blockchain. Ethereum is the second largest blockchain, and I think Solana is coming up pretty fast on Ethereum's heels. Same thing for Ethereum. What is Ethereum? It's 10,000 nodes. It's probably more than that now, spread all over the place. So one of the questions I like to ask Harvard Kennedy students is, when a transaction happens on the Ethereum blockchain, where does it happen? And the answer is it happens kind of in all of these 10,000 nodes, somewhat at the same time, not exactly at the same time, but roughly at the same time. So if you're trying to prove that a transaction happened in a certain jurisdiction, it's kind of virtually impossible because it sort of happens all over the place. So anyways, a lot of people solve that by saying, where was the person sitting when they did the transaction? But I like to ask that question with these slides up because it's not very clear. Okay, so now another view of what blockchain is, and I love this animation. Can you guys all see that? Yeah, okay. So this is the Ethereum blockchain live. And what you're seeing is a bunch of transactions that are all starting on the left side here. These are all decentralized applications. So this one with a unicorn is Uniswap, which is where you swap tokens. And all of these transactions create, I don't know why they decided to make little South Park characters, but I love it. This is, this could be you, right? You could be one of these, you could be Cartman in one of these things. And what happens is all of the transactions get lined up, and depending on the amount of gas that you pay or the amount of transaction fee you pay, it gets sorted by the highest bidder to the lowest bidder. Now on the right side, you have these buses that are getting loaded up, and they're about to go get onto the chain. So what I showed you before, the blockchain, that's the finalized chain. That's like it's done. This is when you're actually preparing to put the transactions onto the chain. So these become whoever gets the highest bid goes onto the bus, and then the bus gets locked into the blockchain at that point. So you see there might be a bunch of transactions at the bottom that somebody was cheap, they didn't want to spend the money on the transaction fee, so it may not get picked up in the bus, or they may have to wait a long time in order for the bus/block. I guess that's the only confusing thing here, is each one of these buses turns into blocks when they get finalized on chain. Fun, huh? You can also look at this in kind of dual view. So if I show you kind of Ethereum on one side and Bitcoin on the other, you can do kind of a direct comparison of how much faster Ethereum is than Bitcoin, how many more transactions are there on Bitcoin than there are on Ethereum, and then like how much bigger the bus is that's actually getting drawn off there. And on Bitcoin, we don't see a lot of applications on Bitcoin, primarily because there's not a large developer ecosystem. It's growing now, but Ethereum has always been the big developer ecosystem that has a ton of apps on it, which is why you see a lot of things on the left side there. Question? Yes.
So the difference between those two is that for the former, there's a marketplace bidding process where you can bid with your transaction fee, and the dispatch will work by the bidding price. Whereas for for Bitcoin, it doesn't exist.
There's also a bidding process too. Yeah, that's what the stacking of all the transactions are on the right-hand side. So those guys are all trying to bid to be in that one yellow bus that's there. So whoever's on the top is going to get into that bus. Whoever bids the highest is going to get into that bus.
Okay, stupid question. Why we have a lot of buses instead of one bus on the other side?
That's just the way Ethereum was engineered from the beginning, or architected, and the way Bitcoin was. I don't know if you have any other better answers than that.
Yeah, so Ethereum has a block every 12 seconds. And what's the
it's like every
between
10 minutes or
Bitcoin
something?
block?
Yeah.
Each Bitcoin block, there's like minutes. So there are more Bitcoin buses / blocks lined up behind this one, but they happen like only every 10 minutes versus the other ones every 12 seconds. Yeah.
Can you put this link in the WhatsApp group?
Yes.
It's like txcity.io. I think that's probably all you need. You can go and check it out on your own. Good fun. It's good. It's a good intuitive way to see it. Now, why did they pick South Park characters? I don't know, but I love it. So, okay, let's keep going. Sorry. Okay, so thinking of this framework again, where you've got these layers and you're building sort of uniqueness and value on top of these layers. I want to get a click more complex than that. Off the bottom of the chart is the internet, so I don't need to show that again. But what we build on top of that are public blockchains and then private blockchains. And then the vertical is Bitcoin. So I have it somewhat chronological. So you have Bitcoin here, you have the Bitcoin stack on the left, you have the Ethereum stack, and then you have everything else. Built on top of the public blockchain, you have Bitcoin protocol or BTC protocols, which is the way that you interact with the blockchain. And then built on top of those protocols are smart contracts, and then there's various different currencies. I'm sure the Bitcoin people are going to yell at me because there's not enough cool stuff there. But anyways, we go over to the Ethereum. You have the Ethereum protocols, and you have ERC20, which is the typical standard for minting a token. A fungible token on Ethereum. It's been around for a while. And then on top of that, you have smart contracts. I call them bot contracts just because I like to make a distinction between kind of a dumb contract that just sort of runs no matter, as long as the conditions are correct, it will run. That's what a smart contract does. But that's why you see smart bot contracts. It's not different from smart contracts. It's just my naming for them. But then you have things like the Ethereum currency. And then you have wallets, and you have custom tokens and NFTs. And then over here on the far right, you have potentially private blockchains. So some corporations like to bring the blockchain technology in-house and kind of run it all on their own for various reasons. And then you have, that creates kind of alternative coins and things. For purposes of this talk today and after dinner, when we're really going to get heavy, so hopefully you guys are going to roll up your sleeves at dinner time, we're just going to focus on this area, which is decentralized applications, wallets. We're not going to do too much in CryptoKitties. I know you might be disappointed, but fun fact, CryptoKitties was the first entity that started NFTs. So it was a bunch of hackers at University of Waterloo that said, hey, we want to create these kitties, but we want them to be unique. We don't want them to be fungible. We don't want them to swap in and out. So they convinced them to create a new standard in the Ethereum blockchain, the ERC 721, which is also known as NFTs. So that's why I have them up here, because they're the first ones. But then custom tokens, like custom tokens and NFTs are also in this little box. So we'll be creating some of those a little later. Okay, so let's take a step up and go macroeconomics now. So on the left side, you have traditional central banks. Do we have any bankers in the house? Anybody from finance or anybody? No, nobody wants to raise their hand. I won't call on you, I promise. At least not now. There's one. Okay, good. So you know the traditional central bank, right? You have the Federal Reserve System in the U.S., right? And you have policy setting guys. And then on the right hand side, you have Bitcoin, which is just a donut strategy, right? There's nothing in the middle telling it what to do. It's just people transacting along the edges of things. And this. So quick side note, I did work with Gary Gensler when he was at MIT the first time around. And I remember having a wonderful conversation with him about, like, we need to talk about the decentralization aspect of central banking. And he completely ignored that question. He did not want to talk about decentralizing. So it's a very interesting aspect of blockchain, and I don't think it gets a lot of attention a lot of times, or there are certain people who are very passionate about it. But if you think about it in terms of a country's currency, what you find is you're not actually in control. It's the protocol that's in control of the currency on the right-hand side. So that typically scares the crap out of most central bankers. Say, like, okay, we're going to give over our currency to some protocol that, maybe we can understand the code, but how is it controlled and who's running it? So I think what you'll find is a lot of the stable coins that are coming out are going to be highly, highly controlled. Okay, my opinion. Who knows what the reality is? Okay, so this is a accounting lens. Any accountants, finance majors, bookkeepers? Come on, nobody? You guys are all crypto. Excellent, wonderful. Okay. So blockchain is also known as distributed ledger technology. It's kind of another phrase that people wanted to use to kind of get away from the blockchain craziness. And a classic ledger, or a general ledger, if you guys, we don't have any accountants apparently in the house, but a general ledger is something that has debits and credits on it, assets and liabilities, and it goes way back, probably way before the what's his name, Ebenezer Scrooge days, when they were sort of writing in all the ledgers. Question for everybody. Does anybody know, if you make a mistake in a ledger entry, how you fix it? Anybody know how you fix a mistake in a ledger entry?
Under USA GAAP or?
What's that?
IFRS? Under which one, IFRS or USA GAAP?
Either one. How do you fix a ledger? Do you take your eraser and erase the entry?
No, I think you're supposed to, if I recall, you're supposed to just make the correction within the ledger so that you can track it.
You make an additional transaction that undoes the previous one. Correct. So I don't know if that was GAAP or what, but that's an important aspect, and that gets into a lot of trouble where people, are like, oops, I made a mistake, let me just erase that. Like, oh, no, I'm not supposed to do that, I'm supposed to add on to it. So in the world of blockchain, what I just described to you is that every transaction gets locked into the blocks. So every transaction is immutably locked into the blocks. So there is no way you can take an eraser to a previous transaction if you did it. So you have to abide by those rules of always kind of adding on to it. So the other wonderful benefits is that it's constantly synchronized, right? Those 11,000 or 10,000 nodes across the world, they all have the exact same copy of the blockchain. I can't remember if do you know how big it is now? Like a terabyte or something? I think the Ethereum chain is maybe 2 terabytes.
It's, I think 1.5.
1.5 terabytes. So all you need is 1.5 terabytes of disk space, and you can download the entire Ethereum blockchain all of the transactions that have happened for the last, since 2013, roughly. It's also immutable, as I mentioned, it's time-stamped and it's decentralized. So what you have is this referenceable source of information, this source of ground truth that is always there and always verified and always synchronized. I talked to some CFOs of some large companies early on in the blockchain day, and they were like, that's great. Can I just get it constantly synchronized? Because I can't, balancing my books across all my different business units is a royal pain. So that's one application of private blockchains. But taken all together, what I find is that blockchain is the operating system for the global economy. So I have these rails that I can put assets on and transfer anywhere that I want to in the world across the internet, of course, but using blockchain technology. So I should be able to operate any business that I want in any area that I want. Any questions on that so far? Otherwise, we're going to get into the fun stuff. Everybody's got laptops. Well done, well done. What time is it? 6:30. Okay, perfect. No questions? We can turn off theory and we can turn on doing it, right? I'm kind of a thinking and doing guy, right? So that was the thinking part. Let's just do the doing part. Okay, let's get into it. Okay, so in order to access the Web3 world, you need a wallet. So typically any browser that you look at, just the browser window, that's going to be what we call Web 2 now, and you probably just call it browser, but that's the old World Wide Web, where the information is kind of available to anybody, and you can right click and grab any images you want, and you can call it your own, you can steal people's memes and all that good stuff. In order to make it Web3, to make it unique, to give it signatures, you need a wallet, which is typically just simply a Chrome extension that you pull down. So with that, you can actually sign transactions and you can prove uniqueness of that capability. And when you have that wallet, you can access decentralized applications or dApps. So, Eric, are you popping up there, buddy? Okay. So most of the Web3 world runs on Ethereum. This is obviously maybe going to change the next time I do this. It might be Solana. We'll see. Okay. So the wallets that are available for the Web3 world, I want to make a distinction between custody and non-custody wallet. Does anybody have a Coinbase account or an account with any other kind of crypto marketplace? Okay. Yeah. Okay, good. So the account that you have with Coinbase is called a custody account, right? So you log in with your email and a password, and whatever assets or currency you have in that, or whatever crypto you have in that, is held by Coinbase. And it's just through your account, agreement with Coinbase that you actually have access to your tokens. So if Coinbase gets hacked, hopefully they have some insurance and they'll make you whole, but there's no, that's what you have to worry about, the security of that. They're very easy to use, of course. If you have problems, you forget your password, you just call Coinbase and say hello. Self-custody wallets are truly decentralized, and that's what we're going to do today, because I find them far more interesting. They're pretty easy to use. We're going to go through them in a minute. But you need to be careful of phishing attacks and some other challenges. There's also, as soon as you get a wallet, there's also this idea that if you have, $1 billion worth of assets on that wallet, you really need to put it into cold storage. And there's a lot of people that have taken lots of pains to figure out how to really lock down their private keys to make sure no one can steal it. I prefer using a simple index card or a piece of paper. So do you guys all have a piece of paper? I meant to bring index cards. I forgot about that. No. And that, even though there's all kinds of fancy ways to do it with USB keys and cold storage and things, it's really the easiest to just write down these private keys on a piece of paper and fold it up and put it away somewhere. It's also a lot more intuitive because the security of your funds is tied to the security of that piece of paper and the 12 words that are on that piece of paper. So it just becomes more intuitive and a little easier to understand. So, okay. So before we create a wallet, which is a MetaMask wallet, I want to do a quick cryptography intermission so you guys understand kind of the fundamental math behind why this is important. So a wallet requires a private key. Obviously, that's yours. You don't want to give it to anybody. And from that private key, we can create a public key. And the core to this ability for me to just hand you my public key and keep my private key private is something called a one-way math function. Is anybody a mathematician or a cryptographer in here? One-way math functions. So a one-way math function, the easiest way to think about it, or my favorite one, which is the core of the RSA algorithm, is factoring a prime number. So if I give you a number like 15, it takes you a microsecond to figure out 5 times 3. I can factor that into the 2 primes, right? 5 times 3. Very simple, right? But if I take 3 and I have like 100 digits of a prime number, so it's a gigantic prime number, and then I multiply it by another 100 or so digits of another prime number, I multiply those together and I give you the product of that, it's impossible for you to derive those private keys from that public key, from that multiplication, from the product of those 2 numbers. You basically have to go through every single number and divide it to find that private key pair. So that's an example of a one-way math function. So multiplying those 2 numbers together to get the public key, trivial, right? Very simple. Any watch can do it, right? A calculator can do it. Taking that one big long, multiplication of 2 prime numbers and figuring out what the 2 numbers were that multiplied them together, impossible. Except maybe with quantum computers, but that's a different story. Okay, so that's a one-way math function. So cryptocurrency is full of all kinds of one-way math functions, but they're core to kind of the underlying basis of a lot of the stuff that we do in all this. So when we say, I want you to sign this transaction, what you're doing is you're using your private key to sign it in a unique way that can be proven by somebody else that you actually had the private key without disclosing the private key. So there's a lot of fun math things in a lot of this. So in order for us to get the private key first, what we need to do is, it's a big long number, but the wonderful people at Ethereum said, instead of having people, write down numbers and hexadecimals, let's just figure out a way where we can take 12 English words out of a 250,000 word dictionary and just give you 12 unique words where the order matters, and that becomes your private key. So securing those 12 words, also known as a mnemonic phrase, is the key to securing your private assets. So if you get someone saying like, oh, in order for you having a problem, in order for me to fix it, you're going to have to send me your 12 keywords. Obviously, they're trying to scam you out of your crypto. No one needs your 12 keywords, except maybe your spouse or something. I don't know. Okay. Okay, so that's crypto. Does that understand? Questions on one-way math functions, cryptography? Obviously, I could talk about this all night long. No? All good? Okay. All right. Everybody got their laptop open? Let's build get some wallets figured out here. So I'd like you all to go to metamask.io and then grab the extension for your browser. So MetaMask is not necessarily the greatest wallet, but it's the wallet that everybody uses. So it's kind of like, it does have some UI problems. Everyone likes to complain about them, but it's kind of the standard. So, I think there's 2 ways to use MetaMask. One is on the web page, and the second one is with a browser extension. So I'd like you guys to all add the browser extension to your browser. Does everybody have like Chrome or Brave, or I think it actually adds to anything here. So, okay. So on the next page, these are the instructions. These are the short version of the instructions, just these 2 things. I'd like you to, once you guys get that figured out, which maybe we went a little too fast. Did I go a little too fast? Let's go back a minute. Let me set an alarm, set a watch for 2 minutes here. Questions or comments on MetaMask? Yes.
Why are you recommending the extension of the browser?
So the reason why I'm recommending the extension is because all of the slides after this use the extension, use the pull down. So it might be confusing if you have to go to a web page and do a transaction instead of just pulling it down. Also, when you interact with a decentralized app, the web page that you want to look at is the decentralized app web page, and you want to just be able to pull down and do transactions from that extension and not necessarily interrupt the actual application in the window.
Cool. Really slow.
Is everybody able to connect?
It's downloading really slowly.
Oh, really? I guess we're all trying to do it at the same time.
Secure my wallet tracking.
Are you on the step that says secure my wallet? Yes.
Yes.
You put a password in there or something to secure it? Perfect. Did you get your 12 words?
Yes.
You got your 12 words? Where did you put them? You didn't save them? Okay. So here's a question that I often get. Why don't I just take a picture of my 12 words? What do you think? Do you think taking a picture of your 12 words is secure? He says in a leading, obvious way. So when you installed TikTok or Instagram, did you say allow access to my photos? If you said yes to that, then guess what? All of your photos could be leaked in including your 12-word phrase. And in this environment, when you guys are writing down your 12 words, obviously it's not highly secure. People can look over your shoulder. So your 12-word phrase will likely be compromised, right? You can't guarantee that it was unique and saved. So what I recommend was we just do the lab class today. And then when you go back to whatever secure location, you can create a new wallet from that. Question?
There are two questions in the chat.
Okay.
Around, is the recording going to be made available and the slides going to be made available after?
Yes, I think the recording is going to be made available on the slides. Yes, so hopefully everyone connected to the WhatsApp group, because we'll post the slides in the WhatsApp group. Yes, question?
After secure my wallet, I'll create a new wallet, and ask me to create a password.
Yes.
But the password is not like the password.
Right. Yeah, the password is just a regular password that gives you access to the keys. Your private key is going to be stored in your browser. And so the password is going to give you access to that. So it's just kind of a level of security. But if someone steals that password, they have to steal your laptop in order to get your private key. They're not going to be able to, if they get that password somewhere else, they can't get access to your funds.
Does the internet connection matters? For example, if you were to do China and the internet country, the traffic safe,
Is the internet traffic safe?
for example, in some places, internet is fine. The telecommunication connection.
I'm not familiar with that. Could be. Other questions? Is everybody getting their wallet figured out? Ready? So one of the things that I want to do is you'll have plenty of time to get your wallet figured out, and then share your wallet address with the WhatsApp group and with Colfax. Oh, let me put that up actually.
Okay, so I'm going to share.
Oh, here we go.
The WhatsApp group right now. So once you have your wallet, please submit your address to the form, and I will give you your first bit of cryptocurrency. So you can get the rest of the box.
How do you do that, send or?
So right now on the screen is a Google form that you can enter your wallet address in. And if you see on the right-hand side of the screen is a picture of the MetaMask once it's pulled down as a Chrome extension, which is why I wanted to do Chrome extensions. And if you see this wallet address is shown right here, there's some dots in between it. It's a very long number. It's a long hexadecimal number. And when you get to this point, you'll be able to just copy that and put it into the Google form.
Where it says account one, that's like account one.
Yeah, yours probably says account one, yeah. Yep. That should be your primary account for that private key. All right, good. Just give it 2 minutes here.
So that's turned into a bit of a DDoS workshop.
I'm here to help if anybody has any questions. Yes, I can come over there.
Does everybody have this Google form already? I'm going to go back to the WhatsApp group. Is it not working? Yeah, or are you in the WhatsApp group? We can post it in the WhatsApp group too.
This never actually comes to that, because this is only for you, but if you click this here. Get started. Get ready. Go to the Google form.
Okay.
Who has already posted their wallet address to the Google form?
All right.
No problem.
So now you can copy this.
Great. That's it. No, you're all caught up. So just submit the address to the form. Yes.
Just like they want things, they want things.
All you have to do is just post something. Yes, so once you, first you need to copy this. And it's not that's how it's
Is that good as everybody on Monday have that? Totally got it.
So from our we are.
Does everybody have it? Does everybody have it on, have your address on there in the Google form? Yes? No? Okay.
In order to access this, and that'll be, so it's gonna ask you a couple questions, and then it'll actually show you how we're done. Do you have a question?
We're good? We're good? Did you see the, it was actually put, it was posted to the WhatsApp group. All right, let's keep going. Okay, couple of quick notes. Oops. Excuse me. A couple of quick notes about this is the MetaMask wallet, and this is going to be the same for any wallet that you might come across. One thing you can do is you can change chains that you're on, so it defaults to the Ethereum mainnet. I mentioned in the beginning that there's Bitcoin and Ethereum, and there's a bunch of others. There's actually a whole bunch of what's called EVM compatible chains, or chains that are similar to Ethereum. And you can change the chains by clicking on that central piece. And we're going to do that later today because we've got, we're going to do a lot of transactions on the Polygon chain. So I don't know if you can click down and try and change the Polygon chain right now, that's fine. You don't need to do it right now, but if you see that it's available. So on the left side here, you see that I've got Polygon displayed there. And if you're not available, we can help you figure that out. You guys already figured out where your wallet address is. And then finally on the right-hand side, the private key that you created generates one primary address, but it can actually generate a whole series of like 10 different addresses for you from that original private key. So you can generate several different accounts, and those all come up if you pull down the right-hand side. So we're not going to use those today. I just wanted to mention it to you. The other important thing to know is all of those different chains that you're on, once you create that private key and you get that public wallet address, you have that same wallet address on every single EVM compatible chain. It's a little counterintuitive. It's not to say that when you have assets in your wallet on the Ethereum mainnet that those magically appear on other chains. It's just that your specific wallet address and that sort of cryptography is similar to other chains. So once you create a wallet, you can actually transfer, you can move around the different chains and interact with other chains.
The folks who put their address.
Really? Okay, so everybody should try and change chains to Polygon chain. So if you change chains to Polygon chain and you entered your wallet address into the Google form as of 2 minutes ago, you should have a couple of tokens in your wallet. How do you see the tokens in your wallet, you ask? Does anybody see tokens in their wallet more than 0? Who does? Yay! How many tokens did you get? You guys are all the wonderful recipients of 2 Polygon, which was worth about 30 cents each for a grand total of 60 whopping cents. You know? Thank you, Colfax. Don't spend them all yet. We're going to spend them in the second half of the class. So, how did we get those polygons to you? I actually bought them on Coinbase this morning and sent them to Colfax, and he sent them all over to you. So, if you guys want to enter more other addresses on, please don't do a second account and add it on there because you want 2 Polygon. I mean, come on, this is Harvard. You don't need to scam us out of 60 cents, dude. Okay. So Ethereum is the mainnet, which is a proof of stake chain, and ETH is the primary currency. So when I say mainnet or ETH is the currency that you have to pay the transaction fees with. So it's also highly traded. It started out very low and now it's a couple $1,000. I mentioned the EVM compatible chains. Polygon is also a proof of stake network. And it was the token for that was called Matic. So you might see that around some places. Some old apps might say Matic. And even though you're like, hey, I have 2 Pol, why does it say 2 Matic? It should be the same thing. There's also something called Gnosis Chain, which uses XDAI, which is a wrapper around a stable coin for its transaction fees. And the nice thing that I always loved Gnosis Chain because it uses a $1 token, an XDAI token, as its transaction chain. And usually transactions are like 1/1000th of a penny. So I've done this class before. We're using Gnosis Chain because it's super cheap. Luckily, Polygon is relatively cheap for transactions. I forget what it was, like 2 or 3 cents. So those 60 cents we're probably going to burn up on Polygon. So don't spend them anywhere. If you want to get a full list of all of the chains, chainlist.org is a great place to go. And if you want to get a list of a bunch of tokens that have actually been kind of a little bit curated, sort of like proven to be like reasonable tokens, you can go to tokenlists.org. A lot of times there can be other tokens that are generated that look similar to the real one, and you don't really know which one the real one is. So you can refer back to tokenlists.org to get that real one. Yes.
This Polygon also has nodes.
Yeah, they do have nodes. I don't have the picture or list of all of them, but yeah. You can be a node if you want and make money by confirming the network, and then keep an actual copy of the full blockchain on your laptop or your PC in your closet if you want. So, okay. So one question that we often get is, okay, I've got this stuff on Polygon. How do I move it over to another chain? So there are things called bridges, which gets into a level of complexity that you would think if you're trying to rebuild the financial system, you would just have one chain and one chain to rule them all. Of course, that didn't happen. We have hundreds of chains. Hundreds of chains? I guess it's probably hundreds of chains at this point. Yeah. But on the mainnet, a typical gas fee is like $2 to $50 per transaction. So a lot of people don't use Ethereum mainnet for many things. In fact, it's given the phrase whale chain, which means like if I'm moving $5 million from one wallet to another, but what's $1 or 50? It doesn't really matter. But if I'm trying to buy a coffee for $3, I'm not going to pay $50 in transaction fees for that. I mentioned Gnosis chain, which has super low transaction fees, and Polygon is about 1 to 3 pennies to do the transactions on that. Some of the popular bridges go from like Ethereum mainnet to Polygon or Ethereum mainnet to Gnosis. I do caution people when they do use bridges of moving funds around because the bridge, usually a bridge has like a bunch of assets on one side and a bunch of assets on another side, and then you use a smart contract to swap them across. And they have been hacked because they're usually honeypots full of lots of yummy funds. So I just typically when I use a bridge, I'll use it for a short period of time and make sure that the funds are fully transferred and then move away from the bridge. Okay, so one question is, if let's say we want to drill down and we want to get into the blockchain or we want to look at what's happening in these transactions, there's a whole set of things called block explorers. Mainnet has etherscan.io, and what we're going to use today is Polygon. So if you go to polygonscan.com, you can take the wallet address that you have and you can put it into that, and you can see the transaction that Colfax just did to move funds into your wallet, and you can see it live. Or you could watch it live if you saw it while he did it. Every chain has its own block explorer. They're pretty standard. So this is what etherscan.io looks like for mainnet, and you can just put your address up there. If you just go to, I think it's more interesting if you go to polygonscan.com and put your wallet address there, then you should be able to see the transactions. Let's see. There you go. What's that? Woo! Are we doing WhatsApp, or are we still doing the forum, Colfax?
The forum, please.
Anybody who didn't get their form in or didn't get their tokens in, you still use the forum so you can get some tokens. Okay, so one of the things that you might notice about a block explorer is that all I have to do is put that address in that's your public address. And I say public address because it's very public. And all the transactions that you're going to see in your wallet address, well, there should be one transaction, right, which is just pull coming into your account. But if you look around, you'll see that there are a lot more transactions and then assets within a wallet. And that's one of these, I guess it's a powerful thing of blockchain, but it's also kind of a challenge, which is whenever I have a transaction, that's a public transaction. People can just see that, what token did I bring into my wallet? What token did I sell? When did I sell it? When did I transfer it for something else, right? Not necessarily sell it. And there are some people in Treasury that I know who like quietly love blockchain because they're like, all of these transactions are on chain. We can see everything. This is fantastic. So, people are worried about issues with blockchain and transactions happening, but they're like, no, we can see it. We can see who they're connected to. We can see all the transactions that are going on. So keep that in mind. It's supposed to be a feature of blockchain. And then any questions on that so far? We're good.
Everyone who has submitted their address through the form should have 2 Polygon now. So if you don't, let me know.
So I want to show you just one example of what happens when you have a public chain. So if you go to etherscan.io and you type in vitalik.eth, where the address is, I know that Vitalik.eth isn't a public address, but that's what's called an ENS, which is a similar of DNS, but it's for Ethereum addresses. So Vitalik.eth transfers into an actual public address. And what you can do is you can look at Vitalik Buterin, who's the founder of Ethereum, and his wallet. So this is his wallet, and he has 964 ETH in his wallet, which has a value of about $2.5 million. So you can just see like right online exactly where it is and what transactions he's doing. Yes, sir.
What's the spelling? What is?
Oh, VITALIK.ETH. So if you just type that in the address thing in Etherscan, I think it should resolve right. I think that's what I did. But I've got it on the screen here, so you can see the sort of 2.5 million. And then you can see a lot of transactions. So you can, one thing that I want to point out in a lot of these is that when you have a wallet, anyone can put any token they want into your wallet. I mean, you can obviously send it out once it comes into your wallet. You are the only one that can take funds out of your wallet. Everyone can see all the transactions and all the assets in your wallet. So now all of a sudden it's not so cool, right? And if you look at Vitalik's wallet, you'll see he's obviously very famous, and he does have. I think there are other wallets that have more like $1 billion in funds that he holds on chain. But what you'll see is there's a ton of transactions where people have just put funds into his wallet or put NFTs into his wallet because they're trying to, get his attention, or I don't know what, or trying to trick him into something. So this is basically the world of blockchain spam is what you get, is that people just mint sort of garbage tokens and then throw them in various wallets. So it is hard to kind of see where the actual transactions are, but if you see this from line and you see this Vitalik.eth, so we know that he transferred this 0.01 ETH whenever this was, 1 hour ago. I guess it's probably more like 5 or 6 hours ago. So. Yes, sir.
This way, is it theoretically possible that you can contribute your own transaction history yourself by creating millions of like 0.00001 transactions so that people cannot follow your transaction history because you are manipulating the record yourself to avoid regulation or public monitor?
Is there a way to mess up your own wallet so people can't?
Transaction history, because you can create, I don't know, whatever, like an app or you make millions of transactions yourself so that people cannot find out your real transaction.
I mean, I suppose, I don't know if that would confuse anybody because it'd be easy to just code it and like go through the millions of transactions and find the ones of interest, but I mean, this is supposed to be one of the features, that it's an immutable blockchain. So all these transactions are locked in and they're certified and they're confirmed. So no one can deny that you actually did the transaction. So the confidential aspect of it is what is typically done because people don't know what your wallet address is, right? Like there's no reason why. So one question I have for you guys that I think we're going to go into a little more detail, but what ID did you have to put down in order to get a wallet address? What regulator did you have to go into to get a wallet address? Did you have to go and show your passport or identification to do anything? Did you have to go to the bank in order to receive to pull from Colfax, who he just sent it to whatever wallet you put in there. So we don't know if it was you guys or somebody else. We assume it was you guys. That's the anonymity of blockchain is in that kind of the fact that people don't know where the wallets are coming from. Now, of course, if you really think about it, if you double click on that and you say, well, you guys were all in this class and you guys all got from Colfax, so his wallet address is connected to all of you guys. So someone could easily trace that back and say, well, for some reason you guys all got money from this one wallet address, so you must be connected in some way, right? You're 1 degree separated from this guy. So anyways, yes, sir.
Yeah, could you briefly elaborate on the scam token thing, the airdropping? I mean, I've heard like multiple times that it's like a thing that people try to scam you by sending you something. So like, what are the mechanics and what should we look out for?
Yeah, so typically the only way to scam you out of your token is to have you do a transaction on chain that you think is the correct transaction. So I might send you a link that says, hey, you're getting all this money, and it might look like Etherscan, or it might look like some DApp where you're going to actually get, and I have to like approve transactions. So we haven't done any transactions in MetaMask yet, but we will in a second. And you'll see how not very intuitive it is when it's like, okay, I want to send funds to you. There's a whole bunch of stuff that you have to say approve for. And it's through that process that typically most of the scams happen. So, yes, sir. Oh, cool. Hold on, one more. He has another better answer to your question.
I want to add one thing. So I've wondered too, like, how can you scam somebody by sending them a token? And you can't. And as Steve was saying, it all has to do with your initiating transaction. But what a common scam is people send you a token so that maybe they'll think that you will make a mistake and copy the address that sent the token to you, as opposed to the address that you intend to send the token to. And in fact, they'll actually create an address that can look very similar to the address that you want to send to. So be very, very careful, especially when you're copying addresses from one place to another. I've been sending transactions for a few years now, and I always triple check every single transaction I send, because you can't undo it. But that's a common scam where people will try and get you to basically copy the wrong address and send it to them instead.
Yeah, so in that, you guys saw how the address was compressed in MetaMask, where it had like the first 5 tokens and then a bunch of dots and then the last 5 tokens. And typically, if you check the first 5 and the last 5 tokens, it's probably the same number. And that was the assumption going in, but then people figured out that that's all people were using to confirm it. So they figured out a way to create other addresses that had the same front and back, but with a different middle one. And that's more sophisticated level of spam, which you would go after, someone like Vitalik's wallet with $2.5 million. Maybe hard.
One thing to note, like if random tokens show up in your wallet, which truthfully it probably will happen, there's no harm if somebody sends you tokens. There's only harm if you initiate a transaction yourself.
Right. Any other questions? Otherwise, I think dinner is ready. I'll be here during dinner and we can fix any problems or other issues. So go get some food. Don't take too long. No, we'll be back in 20 minutes. 20 minutes. Okay, guys. Let's calm down a little bit. We got a few words from the fantastic Tim, who's so prepared for his testimony tomorrow that he's willing to take a few extra minutes off. Take it away,
Well,
Tim.
thanks, Steve. I was able to listen to most of it, and it was really great. And I again just want to thank you. I just want to say a couple things. I mean, Steve went through a lot of stuff very quickly, and that's great because we're trying to get to kind of the practical. How do I do things? How does this work? What he talked about raises a lot of really interesting policy issues and issues about where this technology is going and how it can be used and what he referred to as the macro part. And for those of you who might be new to this area, you should just know that there is a wide range of views on these issues, from those, of course, who are very skeptical of the technology and think it's only got very limited use for different reasons, to those who are very enthusiastic. Once again, as we said at the outset, we're not getting into that. If we took the time to do that, we'd need, several different speakers and we'd be here till the end of the week. And so, we're not taking a view on behalf of the Kennedy School or anything. And my own views, are different than Steve's on some of these issues. And just to give you a few examples of that, again, for those of you who might be newer to this whole area, I try not to refer to tokens as currencies. And that's because I like to use the word currency when we're referring to what we call sovereign currencies or fiat currencies, money issued by governments. And there's lots of reasons for that, because I think those are the more stable ones. So, I don't think Bitcoin will ever be the equivalent of that or a significant means of payment. On the other hand, I think stable coins that are pegged to a fiat currency could be. And, Steve said they might be highly controlled. And I would agree that they're likely to be regulated. That's one of the things I'll be talking about tomorrow, similar to banks, but that doesn't mean they won't be profoundly useful. But, stable coins are still going to be transferred or probably will be transferred on permissionless blockchains. And that in and of itself raises a whole other set of issues where people debate the pros and cons of permissionless blockchains. You know, they're open, they're accessible, they're terrific for innovation, but, you know, maybe not so good for preventing financial crime. People say, well, where are the gas fees going? Who's really doing the validation process? You know, so you've got all those issues out there. And that's why, you know, in terms of what does this overall represent, I probably wouldn't use the words operating system for the global economy, but I do think it has enormous potential. A couple of other points. There was an interesting question on MetaMask about, you know, do you go directly to the website or and that raises again a question that kind of comes up when people talk about decentralization and, you know, are these protocols truly operating without human intervention or discretion? Because sometimes you can access something directly where it may be automated, and sometimes you're accessing it through a front end, which is really a business that may have, you know, maybe making some judgments about, well, you know, we think you should really trade this way, you know, this is how we'll route your order and that sort of thing. So lots and lots of issues there. And my only point is to say, you know, if you're interested, they're fascinating issues to explore. We don't have time to explore them tonight because we really want to, you know, get into the mechanics of how you do that. But, you know, keep your eyes peeled for other events that we host because we often talk about that stuff. Okay, that's it. Good luck.
Thank you, Tim. And I know he always has to put that in where he doesn't agree with the operating system of the global economy. But you know, that's what we do, right? Having good debate is always healthy. I think I've had that slide every single time I've done this. I think
you have, and I've never asked you to pull it, Steve, because I want you to give your views, and that's good. You know, we're definitely a free speech organization here.
Love it. I love it. The only thing that we were missing, Tim, is that last time when you were here, we actually had Tim doing transactions on the blockchain while you guys are doing them too. So, you know, he can't say that he never did any transactions on the blockchain.
Oh, absolutely. No,
we'll be watching the testimony tomorrow to make sure that question doesn't come up.
Thanks. All right. Good luck.
All right. Now, I know the next phase we're going to get into is minting a token and trading a token. But in order to mint a token, we need to have some reason to mint a token. So the best format and the best kind of way to think about it is to think about DAOs, which is a terrible acronym, decentralized autonomous organization. It's basically what I like to refer to as digital boardrooms. I know that maybe I think some people have called me like a little bit old for calling it digital boardroom. Maybe it's internet boardroom is even older. I don't know. But it's a way to create an organization online that allows you to have votes that you poll online and to take action with the results of those votes directly on chain and online. So online and on chain are two different things. Obviously, you can be Web 2 and online, but this is an on-chain organization. So this is an organization that does all of its policy work and does all of its votes and all of its meetings in the actual blockchain itself. Okay. So where are we? We are in here again. We've got a wallet now, and we're going to create some custom tokens now on the right-hand side of that. And we're going to do it specifically for the Ethereum blockchain. And we can also talk about Solana after class if you want to, because I know that one's coming up pretty quick, but I don't have any stuff on that. Okay. So quick wallet review. I know it was only been like dinner time since you knew this. Anyone can see your balance. Anyone can see your transactions in or out. Anyone can put assets into your wallet, and only the private key holder can remove assets and sign on behalf of the wallet and enter into smart contract transactions. I like this analogy. It's like a glass safety deposit box where anyone can sort of look in the bank and see inside this safety deposit box and see the money that's there and see whatever the liens or other things that you have sitting in there. And there's a one-way slot on it that allows you to put anything they want into your safety deposit box. And then you can also, the other thing doesn't come out of this analogy is you can see all the historical transactions that have ever happened in that safety deposit box. But that's how you can think about your wallet. Questions? No? Okay. Okay, this is Vitalik's. We talked about that already. So if you think about wallets over time, and they develop a history of transactions, and it kind of shows the beginning of a credit score. In fact, I just saw the other day, I saw someone, there's like some website where you can calculate, you can put in a wallet address and it will calculate the FICO score for that wallet address. So if the wallet address is sufficiently old and has enough transactions, it will calculate and say like, you know, how creditworthy is this wallet address, which is an interesting concept if you think about a wallet address having credit, right? It's like, is there something behind the wallet address? We don't really know. But then more broadly, reputation. So kind of, you know, thinking about allowing certain wallets on certain chains and the stuff that Tim was referring to, you can see how a wallet might get tainted or a wallet might have some challenges. I know that there is actually a premium for buying freshly minted Bitcoin from miners. So that's a brand new Bitcoin that doesn't have any transaction history, and there's like a premium for purchasing those things. I had no idea, but apparently they have some value for some reason. I don't know why. We already talked about IDs or KYC to create a wallet. Some people, you know, worry that there's crime that's created from that, and other people say, well, you know, you can actually give finances to people, and they can move from areas out of certain bad countries into other areas and keep their finances with them. As long as you can memorize 12 words, then you can kind of keep it in the right order and the right spelling of all of them. You can keep it wherever you want to go. So, okay. I wanted to do a quick side note on EVM addresses because this is a common question we get all the time. The address that you guys had that you created with MetaMask, that's called an EOA or an externally owned account. That means there's a public-private pair. And then there's a smart contract that's been deployed onto a chain. And that address looks exactly the same as a wallet address. So if you gave me these two addresses and said which one is a wallet and which one is a smart contract, I wouldn't know until I put it into Etherscan and had it look it up and tell me that, oh, this is a contract and that's a wallet. I wanted to bring that up now so you guys don't run into this where it's like, what is this thing? Is this somebody's wallet? Who owns this? So when you see a contract deployed through one of the block explorers, you'll see there's a creator, which is typically an externally owned wallet, not always. But one of your externally owned wallets will actually create the smart contract that's posted on chain. Questions on that, or all clear as mud? Good. Okay, the other question that we often get is, how do I get fiat currency on and off chain? I think the most popular in the US is Coinbase. You can connect your bank account to a number of different, or you can connect it to just about any kind of wallet. I find, I don't know about you, Colfax, but I find Coinbase to be rather confusing. And then maybe it's on purpose so that you like make sure that you're like have everything figured out before you move money out. But nonetheless, I don't know if you find it.
A little bit. I've used it definitely. It's definitely useful, but aspects of it are confusing.
Yeah. So if someone's super nerdy and they look at their wallet and they look at the transaction, they trace the transaction back to Colfax. You can trace it back to the transaction that I sent to Colfax earlier today, and then you can trace that transaction all the way back to a Coinbase wallet, which is not my wallet, but it's a custody wallet that Coinbase owns that I used to transfer money out of my bank account into my own wallet, and that I could then transfer to Colfax. So, and I think it cost me like $3 or something to get. It was like Coinbase had like a huge transaction fee, but you guys will see in a minute. Like the transaction fees on Polygon themselves are pretty cheap. So, and then of course, what IDs and KYC do I need for a Coinbase account? I need to go through all of them, right? I need to use the driver's license, passport, all that kind of stuff, and bank account identification, everything else. Okay, so I want to talk a little bit about DAO. So this part is extra fun, and I think we have everybody at a table is now a company. Okay, I know it's just temporary, so you guys are all gonna have to figure out like, and if you're not at a table, you can join one. At the company, you're gonna have to figure out the company name. So you're gonna discuss and figure out company name. But then the most important thing is the token symbol. You know, are you gonna be ETH? No, that's already taken. Are you gonna be HKS? Come on, I mean that's already taken too. But you need to figure out those couple of things. We're gonna use something called Aragon which is a no-code tool to build out a decentralized autonomous organization. So each one of your tables are going to be their own DAO and all this stuff. And as a result of that, we're going to mint an ERC20 token that will be your company or your DAO's token for the purposes of today's exercise. So we're going to do that now. And what I want you guys to do is, I'll just give you a couple of minutes to talk amongst yourself and come up with a name. And then three letters. So we want to have that figured out. And then we're going to go into the Polygon chain, and you're going to have to also nominate someone from your table who's probably the most adept at all this stuff to actually take the lead and create the organization. But hopefully you guys can all gather around and watch that person build the organization up. So I'm going to do it here. I'll do it manually, slowly, via slides, but I want you guys to think about that as we kind of go through it. So, does it make sense? Okay. So what we're going to do is we're going to go to app.aragon.org, and we're going to be on Polygon, and we're going to create a DAO. So let me just walk you through this, and we'll go through it a couple of times so you guys know how to do it. First, I want to connect my wallet to it. So I'm going from kind of Web 2 world to Web 3 world, and then I want to click on this Create a DAO button. And then once I build a DAO, I need to select Polygon as the correct chain. Once I create that, select Polygon, I want to name the organization, and then I want to give it the three-letter token symbol for that. And then what I want you guys to do is we'll have to figure out how you can all give each other your partner's token address, so that everyone around the table has basically equal amount of tokens. So if you're creating test DAO token, everybody gets 10,000 of those tokens, and then you all have sort of 10,000 of those tokens in your own wallets. And we're going to create these tokens live right here. When you all have the same number of tokens, then comes the voting aspect of it. And I realize that, these are organizations that you're like, I don't agree with these people. I don't know what it is. But we'll set up a threshold, and I just want to run through the kind of voting of a typical on-chain organization. Threshold is classically 50%, so a majority of people that vote for a proposal have it pass. And then a minimum participation, meaning like if you have 5 people in an organization, at least 3 out of 5 of them have to participate in the voting in order for it to actually pass that threshold. And then at least 50% of them have to vote. So that means 2 out of the 3 have to say yes to the proposal in order to get it passed. Why am I setting all this stuff up now and all we want to do is mint an ERC20 token? Because a lot of these questions get baked into the smart contract. And as we were talking about earlier, that it's immutable, it's very difficult to change. Even though at the bottom of this slide, it says you can change it, but you have to vote on it. So once you set up an organization and you have the voting set up, then that's locked on chain. And if you want to change it, then you have to put probably a unanimous vote among everybody else to change the underlying constitution or bylaws. So does anybody here create, C corporations or LLCs? And there's a process of going through like a certificate of incorporation or what's it called, a registry and stuff. There are certain levels of bylaws that most people just ignore. And I'm actually writing a blog post that kind of says the bylaws of a corporation are similar to, game rules of a board game, right? So when you sit down and play a board game, some nerds open up the rules and say, this is how it works. This is how, this is how many players you get and all that kind of stuff. Most people don't. They just go ahead and start playing the game. That's also true for corporations. Most people just start a corporation. They're like, what are the bylaws? I don't know. We have to have a meeting, an annual meeting in some time. This is the same thing. When you're setting up the governance of an on-chain organization, you're setting up kind of the voting policy. The difference here is that you're locking it on chain. So as soon as we decide all this stuff, it's going to be baked into a smart contract and very difficult to change. So I'm running through it quick now, as Tim said. We're kind of going through this fast now. If we were to do this for real, I would spend an entire class on doing nothing but figuring out the companies that we're creating and what kind of voting structure we want to have and how that might change over time. So unfortunately, the testing, we want to make this 0 days, 1 hour. I think that's the shortest you can make it, which is unfortunate. The previous versions, they had like 10 minutes, which was good for testing purposes. If you want to like, let's put out a proposal and let's vote on it, right? So you have 10 minutes to get your votes in, right? And if 10 minutes elapses, then if there's enough people that voted for it, then the proposal passes. And if there's not enough people that vote for it in 10 minutes, then it just sort of goes goes dark, I guess, or it just is rejected by the system. So I wanted to mention these kind of settings because that's what you'll go through in the actual Aragon DAO organization. And then this is the point where you deploy your DAO. So you can double check everything on the screen before you click deploy. And then this is probably the most annoying / complex part of the process where you're doing an on-chain transaction and you're minting a token. So as soon as you click that little lightning bolt in the upper right, what you get are a series of MetaMask transactions. And this is also where MetaMask is not the greatest in terms of user interface, because sometimes there's a number 1 that pops up on the little Chrome extension and you're like, oh wait, there's something I have to do in that MetaMask. Okay, I have to say okay to it. So you'll notice this one, it has 8 cents in fees in order to kind of create your organization. So of the POL that you got, I guess it's whatever that is, 0.17 POL. So that's not too expensive to create an organization. I've done some of these before on mainnet where it's been like several $100s in transaction fees to create an organization. Luckily with Polygon, it's not too bad. But then you'll get a series of confirmations where you'll have to go through kind of a number of different transactions. And it does take a few minutes for it to actually kind of go through. So I guess given the kind of network status that we had earlier with downloading MetaMask, it might be an interesting process. So it might be challenging. Yes, Colfax.
And one quick reminder, before you embark on the process of creating the DAO, just make sure that on MetaMask you're on the Polygon network, because that should save you some trouble down the road.
Yes. Although, I guess in the Aragon app, you have to select Polygon. But if you're...
There could be some disagreement between MetaMask and that, so.
Right.
Yeah.
One of the wonderful user interface aspects of blockchain. So if you select Polygon in the app itself, that doesn't necessarily mean that the MetaMask has changed to Polygon. You have to manually do that yourself. Okay. Okay, so then we've got, once you have that, you will have a DAO that you've created. And so I need you guys to do 3 things: company name, 3-letter token, and then you got to nominate one of the people at your table to be the primary person to do these transactions, to actually build the DAO, because it's only one person who needs to build the DAO, but hopefully you invite everybody else in to do it. So that's all part of the fun here. And this is a test DAO that I guess Colfax made earlier today. And then we're going to get the token address. Okay, so that, any questions on this so far? The token address of the ERC20 token that we create is going to be the most important thing to generate, to grab out of this entire process. So let's go back to the beginning, and let me give you guys a few minutes to discuss among yourselves. Or are there any questions first before we break into groups or break into tables? Yes, no, clear? Okay, go to it. Company name, 3-letter name, and then nominate one of your people to be the primary person. You didn't think you.
Yeah, down, you create down, down is getting confusing. It looks so digital.
Yeah, this is like your.
And I think so. Just like on the.
People will see it, yes. It's gonna be.
What if we need like one city? Like just. In description.
That's our secret.
Okay, and we did a picture. How what they all work.
What's a multi-sig?
Multi-staking is if you have an investment and you have it's a smart contract wallet. So no money can go in or out unless you go to a wallet. That would be like if you wanted to have. You want to manage it carefully.
Got it. Okay.
That way it's like not just you guys saying, yes, we want to 2 out of 3 people say yes, 2 out of 3 people. So we want this to. Or you have no, I think it's just
Yeah.
those are all.
Say like
Just worry about
but is it okay for me?
yeah,
Why? Because you don't get it
there it is.
With an original. So it could be like, what are some of the tokens? What
And the company is different than the tokens.
But the token is now
How about
the
tonight?
Love it. Tonight.
similar to the other.
I want to see something.
Yeah.
This support so the number 50%
I will need to copy it and that's
It would just use
You want me to
Is that like the shortest time after which we can start?
That's the minimum amount of time. I've done it before. It's just for like testing where you're like, oh, you guys do the program, you got somebody sitting here, it's like, okay, I'm gonna vote on it, but you can do that, but then you have to wait 2 minutes.
Yeah, so it is already registered.
We have 6 games.
Yeah, like they connect their wallet to it should say like, oh, you're a member of this DAO.
Oh, right there. I'll show them the MetaMask profile. The MetaMask profile.
Yeah. Oh, okay.
Thank you.
That is good.
Can you go to the Paragon app and see if you can connect to the app and see that you're a member of your own DAO. You know what I'm saying? Yes, but then number 2, if you go to Aaron. Okay, one quick comment for everybody. Can I have your attention for 1 second, guys? I just want to address one quick issue. When you guys get to the point where you're minting an ERC20 token and you're sending it out to everybody's wallet that's a member in the DAO, the question is, how can I see the tokens in my wallet?
One of the weird things about the world of MetaMask and the world of blockchain is that token that you just minted is super young. It's like seconds old. So it's not known by anything on the chain or any database. So what you have to do is go into MetaMask and say, add my token. And one of the most important things you need is this token address. So hopefully everybody got the token address itself. So I would send the token address around to your members, and you can go into MetaMask and say, can you add this token to my known token list? Because MetaMask is like, this is a scam token. It was created 2 seconds ago at Harvard Kennedy School. Clearly it's not a valid token. Sorry. No. Does that make sense? Yes? Import tokens, yes. Yes. And then you have to paste the actual token address into that thing. You can't give it the name because it's not going to know the name yet. It will know the full address, but you have to make sure you're on Polygon chain too.
This is the gas, right? Okay, so now for early execution. So the allows the
Okay, one other quick note. For all the other members of the DAO that didn't create the DAO, you should be able to go to app.aragon.org, connect your wallet to that, your non-DAO creator wallet, but member, and then go into the Explore DAOs and find the ones that you're a member of. You should be a member of that DAO. It may take a little while because you are creating a brand new DAO as of 2 minutes ago or 5 minutes ago. So has anybody got that to work? So if you didn't create the DAO, but you're a member of the DAO, you all created the DAO. So everybody else that's a member that you put their wallets into the DAO and they all got tokens.
We haven't minted.
Okay. So as soon as you mint the tokens, you can send the token address to everybody else and they can put it in their wallet in MetaMask, like I said earlier. But then they can also connect their wallet to app.aragon.org and see that they are a member of that DAO we just created. Yep.
And this is the address.
But if we do that, I would say obviously
It's in there somewhere. So far, there are only 6.
Perfect. How many tokens?
10,000 or million, whatever you guys want. Which DAO are you involved? So who's creating the DAO? Okay, did he put your wallet in that DAO?
So I get $1 million. Right? We can sell.
Okay, is everybody getting settled? Everybody got their DAO created? Everybody got their ERC20 token address? We got a bunch more cool stuff to go after. So much more cool stuff. How many teams have their ERC20 token minted? Minted and in everybody's wallet? No, not yet. In their wallets. Okay, so if you're trying to find the token in their wallets, I would recommend going to Polygon Scan first and look for your wallet and look for internal ERC20 transactions. That will be a lot more up to date than MetaMask. Okay, guys, we got a little more to go on tonight, so I want to make sure we have time for getting it all figured out. Does everybody have an ERC20 token that they've minted? Yes? If you don't have it in your MetaMask wallet, check Polygon Scan using your wallet address and see if it's in there. There's a tab in Polygon Scan that says, I think, ERC20 transfers or something. It should be in that, if it actually happened. Polygon Scan is more up to date than MetaMask is, so it should be. It should actually read from directly from the blockchain.
So which is different.
Okay, guys. We're gonna have to get moving on to the next phase of things so you guys can see. So typically, as I mentioned, we usually do this in like 2 or 3 sessions. Previously, I've done it in an entire semester long class. So we're really jamming stuff in here. So I know this is getting a little thick, but hopefully you guys can all get a token address. That's going to be the most important thing. So hopefully keep that in a clipboard or on a notepad or somewhere. The token address is not private, so you can put it all over the place, put it on WhatsApp and everything else. But we're going to use this token address multiple times in the next few minutes. So make sure you have easy access to that token address. Okay. And hopefully everybody has an ERC20 token by now. At least most of you do. Okay, we're gonna keep going. One thing you can do is take your token address to Polygon Scan and type that in instead of your wallet address. You type in the token address, and what you're going to see is an ERC20 token here that was created by whoever your primary person that created the DAO is, and that's what it looks like. And you'll see max total supply here of tokens, and then how many holders there are. So this is an easy low-level way to see how many token holders hold the tokens and what addresses have them. You can always refer back to kind of a block explorer at the lowest level. One sort of quick side note, there's the question of how many decimals. And the typical number is 18 decimals. Why is that? Very briefly, all of cryptocurrency calculations are done in integer math form. So if I need to have $1.00, that's not an integer, right? That's a floating point. So instead I carry 100 and I carry 2 as the decimal points. So every single cryptocurrency has 2 numbers that represent it when it's carried through. One is, what's the actual number of tokens I have, and then how many decimals do I move the plate over to. The default is typically 18 decimals. So if you guys get into the point where you're putting it into your MetaMask and it says, how many decimals? It's 18. And you'll see that up here somewhere here, token contract with 18 decimals. Okay. Okay, so we talked about voting already. Let me skip over that. Just real quick on innovation. I like to characterize things in 2 different ways. One is incremental innovation, like lowering costs. The advantage goes to the incumbent. Architectural innovation. For blockchain in particular, it's decentralization of system and authority. The advantage typically goes to a new venture. Now, why do I bring this all up right now? Because the question is, how do we take advantage of the decentralized aspect of blockchain and create new ventures? Well, one way could be, how do I confirm an asset transfer anywhere around the globe with 0 trusted intermediaries? Well, there's no way to do that right now, but any L1 can do that for you. So that's an example of kind of a disruptive innovation in blockchain that's being deployed. Now, what if I wanted to do a brokerage firm where I can buy and sell, I don't want to say stock because Tim's probably listening, but buy and sell tokens. And I guess I do throw around, I should say that I do throw around tokens and currency a lot, and he's obviously about to testify tomorrow, so he's very careful about his words, so I appreciate that. But how do I create a decentralized brokerage? Because ultimately, when I'm trying to buy and sell shares of a company or buy and sell something or trade something, it's a person-to-person transaction, right? Why do I need a big centralized exchange to do that? One of the reasons why we need a centralized exchange is because I want to have a concentration of buyers and sellers. I want to have high liquidity, high volume, good price discovery, and market makers, and I want to maintain order books. So that's the reason why I want to have a centralized one. But what if I wanted to decentralize a brokerage? How would I do that? Who would provide the liquidity? Who would be the market maker? Well, luckily for us, in 2018, this guy, Hayden, created Uniswap, which is basically his way of creating a decentralized exchange or a decentralized brokerage, you could think of it as. It's all open source and a public good. All smart contracts are open source. And then you can see this kind of his tweet of $1 trillion have passed in cumulative volume over the years that Uniswap has been operating. But the question is, how does it solve the liquidity and market making aspects of being decentralized? Well, in Uniswap, you can have decentralized liquidity, which anyone can provide a trading pair. How is this relevant to you guys? You guys have just minted a bunch of ERC20 tokens. Now, what if we want to trade them? Someone needs to provide liquidity for that token. And you know who's going to provide liquidity? You guys are. You're going to provide liquidity for your own token with that massive amount of 60 cents of Polygon tokens you have in your wallet. So an example is if I wanted to use ETH and DAI as a trading pair and post this online, I could take 1 ETH and I guess it's not 1,800 DAI, it's like 2,600 or something is the current value of ETH, but it has to be 50-50 equal value in US dollar denominated terms in order to post the liquidity offering. And what that does is it creates this pool, this combined pool of both tokens and allows you to transfer one to the other. And each trade generates about a 0.3% fee, which is added to the pool itself. So if you want to, you can actually make money by providing liquidity to certain trading pairs. So you post these things online, and as people trade, you generate a small amount of fee. And it's really great between, like, say, USDT and USDC because the amount of fluctuation is virtually zero between those two. Okay, so now how do we solve the pricing question? Well, the guys at Uniswap created an automatic market maker, which uses a constant product formula. X times Y equals K. I don't think, I asked the question earlier if I have any math nerds in here, and no one was brave enough to raise their hand. Does anybody know what X times K, where X and X times Y equals K, what shape of a curve that is, where X and Y are variables and K is a constant? Yes? What's it called? Not a parabola.
Inverse parabola.
It's a hyperbola.
Hyperbola.
There you go.
Yeah.
Okay, so this is what it looks like. And basically what this says is the number of tokens of your currency and the number of tokens of the trading currency pool in this case has to be multiplied together, has to equal a constant. So as you start to buy one up more, as the amount of one token goes down and goes up, the price will change and will increase dramatically as it kind of gets out of sync in one direction. So this curve, very simple math, wonderfully simple math, has the effect of creating kind of stability in the price of the trading token. So could there be better curves? Yes, there's a ton of other offerings that have way different curves, but this one is like the most basic and the simplest one to create. So as a quick example, if I have 10 ETH and 5 OMG tokens, that's my token that I created, and I want to deposit into a liquidity pool position. So I start out with 10 ETH and I start out with 500 OMGs. So my K is 5,000. So let's say the price per token is 50 OMGs per ETH. And let's say I want to buy, I want to trade 1 ETH for my OMG tokens. So I send 1 ETH into the pool, and now the pool goes up by 1.1 ETH, but I subtract off the fee from that. And then the overall amount of OMG goes down by a certain amount because I'm pulling the OMG out. And then the buyer will receive 45.35 OMG tokens, and then the price is set at 45.35 OMGs per ETH, which creates a little bit of a price swing only because of the size of the pool. So that the fee is actually added on to the ETH pool so that the total amount in the ETH pool fee goes up. There's a new K invariant that's calculated as a result of that transaction. So that's one transaction that happens through an automatic market maker. And as you kind of go through and iterate these things, you can see how some of the pricing might go up and down. And it basically has to do with the size of the pool. So in this example, I've got 10 ETH and 500 OMG. If I trade anywhere near those, anywhere like over half of those, it's going to have crazy price fluctuations in it. So if I trade, a very small percentage of that, it'll have a nice even curve. So typically what you see is gigantic liquidity pools that are on chain have very slow price movement, but as they get shrunk smaller and smaller, you get this crazy kind of swings. Uniswap today, there's been version 1, version 2, version 3. And there's, this is actually a little bit old, $4 billion in total value locked, meaning there's $4 billion of people that have put liquidity pools on chain. And then 7 billion trades over 24 hours. The largest pool is DAI USD. So that's a stable coin to stable coin transaction or pool. And then wrapped Bitcoin, we haven't talked about that, but you can actually take Bitcoin and wrap it and put it on the Ethereum chain, which is a whole other weird thing. But that wrapped Bitcoin to ETH trading pool is also one of the largest pools. So success and open source means forks. So once Uniswap came out and they proved that they could do AMMs and they were minting cash by having all these wonderful transactions, and they're like, hey, we're all open source, and isn't it wonderful? And then like everybody came around and said, you know what, I can do that too. So Binance created PancakeSwap, which is a fork of Uniswap. Curve basically forked Uniswap. Balancer did it. SushiSwap. There was a time when it became like the food swap. It was like Sushi Swap and all kinds of other kind of food things. Polygon has a fork of Uniswap called QuickSwap.exchange, and Gnosis Chain has HoneySwap. Okay. So why am I telling you all this stuff? Because you guys are going to create liquidity pools for your token trading pairs, and it's going to be on QuickSwap.exchange since we're all on the Polygon network. But you have to provide liquidity for your own token, and then you can start trading your token. So isn't this fun? Like all the stuff we went from nothing to getting a wallet to creating a token, and now we're going to trade the token, and we're going to create so much value in this room. It's amazing. Okay. Okay, so from the wallet that has the tokens for Aragon, I think all of you guys have tokens that you minted that are in your wallet. So one of you can do it, or several of you can do it, whatever you want to do. You should have a wallet that has your ERC20 token in it and a couple of POL, or maybe like 1.7 or 1.8 POL left or something, whatever it was taken out to do the transaction fees. for your activities. So we do need the token address, as I mentioned earlier. So this is the same slide I said it before, because you're going to need that token address, the ERC20 token address, to do all the rest of this stuff. And also, as a reminder, anytime you can select a token, like three-letter thing, it's almost definitely not going to be there since you just created it. You're going to have to paste in that full address everywhere that you want to use your token. Okay, so let's say, for example, you have one POL or Polygon token in your wallet, and you want to start to issue the trading of your fantastic company that you just created a few minutes ago that each one of you has names for and letters for. We're doing this in one slide. This is the type of thing. This is like the pricing on initial public offering is the equivalent that I like to think of. So, but we'll just do it in like 2 minutes here and we'll just crank it out. So as this example that I have is if I take 100 tokens and I have one pool, and that's the trading pair that I want to set my liquidity pool at in the beginning, that's going to define the price that my token is going to launch at, and my token is going to trade at 0.01 pool per token, right? It's easy to do that math. So I want you guys to all figure out who wants to do it, one person at your table to do it, but figure out how many poll, either 1 or 2, or maybe less than 1 if you feel like it, to put in your liquidity pool. So you guys can all figure that out. And then on the next slide, we're going to actually create a liquidity pool and post that so that it can be traded. There was a question earlier that people said, oh, wait, we're creating this token, it's tradable, right? It's not tradable yet. It's under your control, you have it. You can run an organization, a DAO organization, with a non-tradable token. I know that most people are like, what? It's not tradable. But most tokens aren't really tradable because there's no market for them. So you could hold votes in your organization and just have the people sitting at your table engaged in the organization and just leave the token alone. You don't actually have to take this extra step to trade it, which makes it a lot easier and a lot cleaner organization to run, frankly, for those of you who have run organizations where there's no way to sell the tokens that represent the membership of your organization, then you tend to be more engaged in the organization and kind of doing what's right. But if all of a sudden you can rage quit and exit and cash out, then a lot of people end up doing that. So, okay, so you've got the number of poll and you've got the number of tokens of your token to do. Now we'll go to quickswap.exchange. I'm going to go through this process again this is the last version of this. And then you guys can all do it on your own. So you want to go to quickswap.exchange. And you want to connect your wallet. Whoever wants to do it, all of you can do it, or one of you can do it, doesn't matter. Or none of you can do it. You can just watch and enjoy it. Okay, so then what you want to do is click on pool up there on the left. And then I want you to select V2 when you get to the pool slide. The reason why I want you to do this is that version 2 of QuickSwap is the same as version 2 of Uniswap. And it's the 50-50 token liquidity pool offering. After this class, if you want to get more enthusiastic and go after version 3, there's a lot more complicated formulas that allow you to do all kinds of fancy stuff in that. So you select V2, you can put poll at the bottom, and then when you go to select the token on the top, that's where you want to put your own token. You need to paste the actual token contract into that thing, and it should pop up with something underneath it. It may or may not pop up with anything. Hopefully it does. So you do, as soon as you paste it, you want to be patient because it may take a minute for it to actually look up on chain where your actual token contract is and information about your token.
Is anybody having trouble finding their token address or with their token?
Yeah, COC.
Okay. That's it. Okay.
All right, we were a great company while we
Okay, I want to be mindful of time, so let me just finish up the last couple of things so you guys know the information, and then we can break, and whoever needs to leave can leave, and the rest of you guys can hang around, and we can keep nerding out on this stuff. Okay. After you've created a liquidity pool, which takes a couple of transactions, you have to be patient and get it up and running. You have to approve the token and do a couple of other steps. Then you're actually able to trade or swap your token. So you can execute a trade of your token. I would highly recommend only about 1% of the liquidity pool. So if you put in 100, I would only swap one. Otherwise, you're going to get crazy price spikes and you're going to get crazy warnings and stuff. You should be able to do a transaction with one out of 100 tokens. And then the final thing, I think this is the final slide. Yeah, this is the final slide. You can actually watch your tokens trade. So within QuickSwap, there's an analytics page, and you can look at the token pairs, and you can put in your token and kind of watch the transactions happen. So depending on how gigantic the market is for your token, you can do that. The final thing I will say is if you guys want to put your company name, your token symbol, and the token address into the WhatsApp group, maybe we'll buy some of those, or maybe you'll get a winner. I don't know. Maybe we'll post some extra poll to your DAO treasury or something. We'll see. That's it. That's all we got, guys.